Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Wednesday, May 22nd, 2024. It is 12:58 p.m. Eastern Times. I'm starting the video, and here's what we're going to do. I'm going to do an update on a couple trade ideas. This one has nothing to do with the markets. The rest will. I just wanted to just do a brief update on wheat. Longer term, the charts still look constructive. Personally, I took some profits on, I actually took all my wheat out yesterday. I'm leaving for the time being the soybeans and the corn on. The wheat was the primary trade, and I told you I added on soybeans and corn a few weeks back. When the chart started to firm up on wheat, I did that. And again, this is just a me thing, lightening up right now on the ag commodities for the time being, because you have that negative divergence forming. I mentioned it. We hit, on the 60-minute chart here, T3. On the daily, you can see, we're still coming off that big divergent low, and I'll still maintain these targets. I just think the odds for a pullback are elevated at this point in time. So I'm going to just stand aside that one. But so to reiterate, longer term, the charts still look constructive. Near term, we could get another pullback. And we already had one. Remember, we had divergence when we hit T3 here and pulled back to that key 607 level. And we already got that once. Could get another pullback, still have the divergence. I'm just not as confident right now in the very near-term direction. And so that's just the active trader to me. Other than that, the rest of them, I think corn, soybeans, they still what did I give that to you on the daily? Yeah. We're still hovering around that T1 level, and these are still the longer term potential targets. And soybeans, the other grain, SOYB, still consolidating under, and that's healthy price action. We had the expected reaction when we hit T1. So if we can punch on through, we go to T2, T3, and then T4. So I just wanted to give you kind of a brief update there that the charts still look constructive. And again, may see a little more consolidation, particularly in wheat, maybe a little more pullback. I'll probably get back in sooner or later. I prefer to get back in on a pullback, but sometimes you don't get that. And if we can consolidate here and punch on through resistance, especially take out the divergences, then that's also a time for me to get back in. All right, the other things that I wanted to update, they're more related to the stock market, is crude oil. Remember, on crude oil, months back, I gave you these zones here where the stock market, they would start affecting or likely affect the stock market. And that's because they affect inflation. If inflation goes up or returns, then it curtails what the Fed can do. And so I color-coded them, and it's pretty simple stuff. When we hit the top of the red zone, also mention, I'm going to talk on this a little bit in this video. I'm going to address the pretty much the trolls on the board. They say on trolls, by definition, trolls, someone that posts inflammatory, critical responses online. And look, there's certainly been some trades, especially short trades on some of the short trades on the indexes and semis that didn't pan out this year. But I'm going to talk a little bit about trading. I'm having a great year. I'm profitable, blowing away the market, and that's to be expected. But it's because if you take in a vacuum, and I'll get to that when I go over these index charts, if you're only looking at the short trades, you're only taking the short trades, you're not taking any of the reversals or the long entries. We've had as many long entries right at the pivot points this year as we've had short entries. And again, we've had short trades that would bounce right off where they were supposed to, and some that got stopped out. But I'll get to that. And then the hedging thing. This is where I'm going with this, is right up here. We're at the top of the orange zone. The charts indicated pullback, and I said that would be an effective hedge if you were short or just wanted a pure play short on crude oil, and it more than offset any givebacks had you held on to the QQQ swing short from earlier this year at that time. And then we had the same exact thing with treasuries, and I went over that. The treasuries, we hit TLT at the bottom. I'm going to get to TLT in a second, but I wanted to just mention that this is all part of, if you're, the end game here, if you're only trading the indexes. I don't know anyone that does that. I'm sure there are people that do that. But the indexes, although I do a lot of analysis on the stock market, because that's the stock market, it's only one piece of the pie, and it should be. I feel strongly about that. I've said that for years. trade other things. For those of you that are very critical of the failed short trades, I haven't once, and there's just, it's just a handful of you guys out there, and I usually don't address this. It takes time off the whole, these videos, but how much of the natural gas is already up 45% off the recent lows where we took it. How much of that did you catch? Wheat's up 25% off the recent lows, still going, which blows away, by the way, whatever, if you were short, let's just say you've been short the markets from the beginning of the year. Although the funny thing is we came in long in the beginning of the year in the markets. But if you were, so I don't know. I don't know anyone anyone would be short the markets. The last QQQ trade I did reshort after covering off T2, but clearly stated the downtrend line off the highs. If they pop that, that's where shorts should be. That was, my trading plan, and that we would quickly go to new highs, marginal new highs. So again, it's selective criticism here that's so unfounded. In a way, I feel bad, but I'm also curious why these people are here if they're only focusing on only QQQ trades and only short trades at that. So, anywho, there's a lot of other stuff out there. I did a video on the miners and metals today. We were in at the lows there, and back in February. Even this year alone, it's been a great year. We came into the year short. We had a short on the Qs. The very first part of the year, this was January 3rd, I think, this post right here. Stocks, and precious metals and everything likely to rally. We covered a short. We had a short right here. We shorted QQQ. At the end of the year, milked that whole thing down. That was the biggest drop we had. I don't know if it was all year. One of the biggest. This is a 60-minute chart. Again, this was posted back on. They're always time-stamped. January 3rd. And, cover those. We had just hit, I believe we had just hit the final target on that short pullback trade, and we were long. So we came into the year long, looking for a bounce. Most recently, we also reversed when QQQ hit T2, made clear, hold out on T1. We hit T2. Expecting a bounce there too. And this is where I'm talking, and guys, and again, I'm not only addressing the trolls here. This is kind of, it's, if I see those trollers posts or whatever they are, people upset, but they're shorting the Qs and that not working. And again, making no mention of diversifying and taking treasury bonds, agricultural commodities, energy commodities, crude oil, natural gas, other trades. Again, I would honestly, you're not finding value in the site. You're not diversifying. You're not spreading your bets. And then you're also not, looking at levels where bounces are likely. Cover at T2, game a bounce. And I made it clear at the very time my trading plan was to game the bounce. And then I started shorting back into the QQQ positions. And these were like daily frequent updates, very consistent. And even at that point, when I started shorting back, I fully hedged up with treasury bonds, which I went over at the time, more than offset. So where I gave back up to that point, 433, which I said I would not add to, above 433, and in fact would stop out above the downtrend line, and remove that TLT hedge there. So if you consider the factor in the hedge, not only didn't lose a penny on the reshort entry after booking, the profits on the swing down 8%, but then actually profited net on that hedge trade. That was the point of, taking the hedge trade. And then again, unhedged, and then, gave back a little right there. And that's where I was out last week, and they popped it right when they popped it. Like I said, we went up to the marginal new highs. So I just want to point out all these little nuances, and if you're not listening to the videos, those are the important things. When to hedge, when to be aggressively short, and then speak about that. Last time, the other comment I saw today was with the semis. I haven't posted a short trade idea on the semis. Only thing in 1 month, it's been 1 month. Last update I could find was, and remember doing, was on the 24th of April. So that was a month ago. And yes, I said I very much like NVDA there on the break of that range. It proved to be a whipsaw. And this is the screenshot from the video. It was very, very clear that if they took out this downtrend line, the same downtrend line you had on QQQs, and my words in the video and drawn out there, they're going to quickly take it up to new highs. So I'm going to talk about NVIDIA in this video, and that's exactly what they did. So again, as much as I like to trade, and I said at the time, oh, look, all I can tell you, it's an objective short. Can't tell you if it's going to pan out, but can tell you if they pop that downtrend line, you're probably going up here. So the loss, if you shorted that, would be, it's almost immeasurable. It's so small. If you had a stop under there. And again, that's exactly what we've done here. So these things are kind of laid out in advance. And yeah, there's a lot of these short pot shots I'll take on the equity markets because I believe a very big turn is coming. And so that was it. And then we took it, hit the downtrend line, danced on it, got rejected, and then boom, popped it right there clearly. And what did we do? Exactly what said 1 month ago. We'd go to the top of the range. There we are today. So I'm going to talk about NVIDIA a little bit in this. In this video with their earnings coming up, we're going to take a look at some of the things that have happened in the past with NVIDIA when they reported. I'll give you my 2 cents. I can also say, like I'll always say, I'll give you my best guess to the next major trend that will emerge after earnings. But the thing about earnings, and I'm going to go over that in here, quite often you have a what I call an initial reaction that lasts for sometimes it's only briefly in the after hours session. Sometimes it'll go on for a few days, but usually within 1 week you're going to know which way the stock is going. So that's what I'm going to get to in this video. So going back, let me just, before I get too deep into the equity markets, so again, kind of covering the other trade ideas, USO, remember USO was thrown out as a long recently. We're long here, started scaling in. Again, I'm gave you my trading plan. Start a position there, but with a preferred entry there and an all-in, full position. It doesn't mean all in on your portfolio, just a full position at the uptrend line. CL's on the same, hit the same trend line. So CL's crude futures. We jumped up, and then the last update I gave you, we were at a downtrend line there, and CL and USO set of reactions likely, and we need to take that trend line. The first break or any break of this trend line would likely open the door to more upside. So this is related. It's a standalone trade again. Part of asset allocation, diversifying a portfolio, profitable off that level, not by a whole lot. Actually, of course, natural gas is up a whole lot more. But that one I told you the other day, I just took profits on. I see more upside in the intermediate term, but just like wheat. Hey, got a good run, book it up. You might get a pullback here, and it's been stalling out. I'll get to natural gas in 1 second. It's not going to move the market, but I'll do the trade update. This can move the market, and so that's why I wanted to cover this in today's video, even though it's mainly geared towards the equity markets and NVIDIA. So, okay, the things to note is we're still in that yellow zone. The yellow zone is kind of color coded them, I think, appropriately. You get the the point. Red is obviously more of a danger zone, where that'll clearly put pressure on the market. And I think a blind man can see, if we get the crude gets up in that red zone, meaning it takes out this previous high, there's going to be talks about return of inflation, because as I always say, crude not only has one of the biggest impacts on inflation on the consumer price index, but it's also almost immediately priced into it, unlike other commodities that take a while to price increases or decreases reach the end consumer. So that's it. So we're in that yellow zone. I just wanted to mention we've remained in the yellow zone. Stock market is at highs, but pretty much ever so slightly off or on the previous highs, and so we're not there yet. This very clearly, as I've said, would be net bullish. That should be really a green zone. I didn't color it here. I did that for bonds. Anything below there just means crude prices are going down. That will help inflation abating. And if it does, look, there's a long-term uptrend line that comes into play here on the daily chart. So, but as of now, that's where we're at. We're still in that yellow zone. And then on treasuries, I gave you an IEF. That is the 10-year treasury bond. Months back, I gave you the same thing here. I give you, works a little different. When treasuries go up, yields are going down, and that's bullish for the stock market, net bullish. And likewise, when treasury bond prices drop, yields are going higher, and that's not good for the stock market. And so it was no mere coincidence that 8% drop that we just gained and went down to T2 on QQQ coincided with this drop in bond prices, i.e. spike in yields. We got down into my orange zone where, in the yellow zone, stock market would start to take note, and it did. It started to stall out. The stock market did. When we got in the orange zone, that's when the quicker, QQQ just started going down more impulsively and punched down through 433 and took out our first target, didn't stop, hiccup there, and then went to the second target. And then, as expected, this is when T2 was hit on QQQ. Yields bottomed, bonds bottomed, right? And yields peaked. And then the stock market and bonds rallied. Again, it's intertwined. It's the correlation is unmistakable. And the takeaway is there is, if you can gauge where rates are going, or at least get a good idea, then it helps figure out where the stock market's going. So now, where are we at now? Well, we're at resistance. This yellow zone up here in the top of the orange zone at about 93.50 was not a random area. It was based on the technicals, and we're there. So we're still in that orange zone right now, and we're under resistance on IEF. I also threw out the 10-year the other day. The 10-year is also the 30-year is at downtrend line resistance. So same thing. Based on the divergence and everything. I told you the other day I shorted ZB. I had first thrown a short on IEF there, went to long bond. I have I'm short the long bond right now and the 10-year, but that's the long bonds where I'm focused because I think we'll get rejected here. And I can tell you this, look, if you want to, let's say you want to short the stock market now. We don't have any sell signals right now. In fact, on the contrary, we took out the downtrend line. We took out the highs. And so, if anything, case was made to be long equities once that downtrend line was taken out. But if you are short, you could take a long in TLT because if bonds continue to go up, stocks will most likely rally. There's been a positive correlation. Again, it's not mere coincidence. This is when... right here is when QQQ hit T2, and right after that, Treasuries bounced and rallied, so they've been moving in lockstep. That's when we dropped down on QQQ to T2. However, we're at resistance with negative divergence. So if we get rejected here and we remain within this price channel, I know this is a busy chart. I'm just going to draw it out for you. You've got the downtrend line right here, which TLT has been struggling with. And this is a longer-term trend line that comes in all the way to the left of the chart. And so let me just draw it here. You can draw it like this. So it's really a price channel. And if we get rejected and go down, again, it's incremental, not all or none, incremental. The more we go down, the more it means the more yields are going up and the more the stock market will take note sooner or later. Usually, again, I can't tell you how many days. It's more a function of how far you move. But, again, so if we can start moving lower here, as I think is likely, then again, that's going to put pressure on the stock market, but everything goes in reverse. So if we break out here and we see Treasury bonds going up, and it's as long as it's not for a flight to safety bid, because let's say NVDA poops the bed tonight, I'll get to that in a second, then, you could see institutions buying Treasury bonds as a flight to safety bid if equities are going down pretty hard. So that's kind of that one little caveat there. So that's it. Let me cover natural gas because that's the only other trade idea I've been, the commodities I've been focused on. This was on the 60-minute chart, and I told you there was T4. I gave you longer term targets on the futures and said, this was a major bottom in natural gas, which I showed you a couple months back on the long-term charts, the daily and weekly charts of nat gas. So it was more of, we've been buying skilling in here or buying different buy points, breakouts, multiple, buy points on around support there. And again, this one's up, I don't know, I think the futures are up over 45% off that low. So again, would dwarf even if you've just been shorting the Nasdaq 100 all year, and you just took this one trade, you made more money on natural gas. But of course, you beta adjusted down, and you don't do that. Like I said, we came into the year short QQQ. We bought it the day of at the bottom on January 3rd, went long off T2. So that's how you got to trade. That's what this site's about, swing trade. I try to speak to the investor and trend trader, and I do maintain, guys, I still maintain the longer term targets. And, that the longer term downside targets I'm talking about here on QQQ and SPY, and at least in the near term, the intermediate term, is the where are we at? These right here. So you can consider this all. If you didn't stop out, like I said, that was my plan. No more shorts above there. Stop out above there. But I also speak to the longer term swing trader investor. I still think we're going to go down to these targets. And I suspect the catalyst is going to be NVIDIA. There could be economic data in the next week or two that does it. But the market has this pattern of making these marginal new highs, and then boom, next correction comes. And that would take us down to those targets. Like I said, the case is still there, very much in my opinion. So my point being that if there were multiple sell signals right here, breakdowns there, back test there, the break of 433. So if you're anywhere in that level, that area, your cost basis, and you're still short, then that, you'll have to calculate where your price target is, and then that lets you know where your stop should be. Those are the three things that you calculate a stop on: your entry price, your price target, and then based on that, if that's, let's say 10, or 12%, and you're using a 3-to-1 RR, you give yourself a 4% stop loss, right? That's how it works. And you can use that. I have a position size calculator, and you put the stops and all that on the site. And now these are just intermediate term targets. This is what these are. If we do that, we're going to fail to break out to new highs. And if we do that, and this is how I think, it's, if A equals B, then B equals C, that kind of thing. Or if this, then that. So if we get down to the 200s, these divergences that we have in place on the weekly chart of QQQ, that's my busy board. I think I have a clean board for you somewhere. Nope. Somewhere out there I have a clean board. There it is. That's pretty clean right there. Divergent high, primary trend line right here. So, this looks a lot like we were looking back here, and that's what I'm going to go to. We had that divergence, and it's not all drawn out on this board. Big divergence coming into the 2021 highs. It was November 2021. And so now let's talk NVIDIA. So I've covered the other things that can impact the market. Just to reiterate, we still have crude and treasuries where they should be and potentially going to cap any upside in the equity markets due to that. Again, it's going to tie the Fed's hands to a greater or lesser extent. And where they go from here will certainly matter. So as long as we have crude high, inflationary pressures high, interest rates high, there's going to be somewhat of a ceiling on the market. All right, now let's take it home with NVIDIA. NVIDIA. All right, so like I said in that last update a month ago, was very clear in that I thought it was an objective short there on the breakdown, proved to be a whipsaw. You had a lot of FANGs or Mag 7 reporting then. They pulled it back up. Amazon and it was Alphabet, and who else? Apple's now jumping on the AI bandwagon. Microsoft. They're all, talking about how much, they're spending on AI and how much they're investing there. It's still yet to be paid off. Either way, it doesn't matter. The stock took that level back. And again, then, as I said, if we took it back, we're going to go to the top of the range, and that's where we are today. So we're just in that range. This was a whipsaw. Now, what to expect going forward? What I can tell you definitively right now, that's still the high, that divergent high and bearish engulfing candle. We're effectively right around a hair below it, but we'll call it an equal high. We're in the trading range, but that was a bearish engulfing candle and a divergent high. And now, should we pop this? Let me turn off all the lines. Any new high, see, there's the crosshairs. We're at the previous high. So any equal or new high is still going to be a divergent high. And it will not change my longer-term outlook for NVIDIA. Translation, I won't be buying. I'm going to take a little position of NVIDIA home short today. And if I had to flip a coin, I'd probably say we're going to pop this high in the after hours or in this week's trading during the regular session, and then reverse down through there. You have my targets. They've been there for a long time. The purple uptrend line is a big one. 742 is a big level. And then down here, way back here, this was a key level for me, that 547 level. We had the breakout candle there. There's a big thin zone down there. So I'm just giving you 5 steps ahead. We got to get through earnings first. But if we go down, if we break the trend line, that primary trend line, which again, let me just draw it for you on a clean board here just to show you how significant it is, then that will likely open a door to that, down to that 542 level. This is that uptrend line, very well defined. We're still comfortably above it. Even to get there, now I have to turn back my lines. Even to get there is going to be a, I'm not exactly on it because it moves all these lines if I grab them. So I have to grab a little lower and shoot a little lower. It's about an 18% drop to get there. Okay, so now let's talk about NVIDIA, and let's go back to the last time they had a similar technical posture. I'm going to click on this. This is a chart I posted on the site on February 3rd. You can see it down here, February 3rd, 2022. And so, you know, I've shared this chart many times, and let's zoom in nice and tight so you can see it in the video. NVIDIA offers an objective short entry here on this backtest of the recently broken uptrend line following the most recent divergent high on this weekly time frame. Arrow breaks denote likely reaction points, although those arrows do not align with the expected time frame of the target being hit. So if you see, as we zoom in here, yeah, I can get you over there. There you go. We had just broken the trend line, and you know, and quite often you break down and you'll go on and back test. So that was a back test. It was trading at 241. You can see the targets. 157, 116, 73 right there. And these are longer term targets that I still maintain are in play. And that was on, again, the key here is February 3rd, right? And you see right before that, the stock peaked shortly before that. Okay, here's the same NVIDIA chart. All these levels have been untouched, showing you that the nature of this beast, as I've covered many times, drops well into the 50% plus range are not just common, they're the norm when trends change. You know, the smallest trend reversal we had was a 50 alpha divergent high was a 56% drop. It had 90, 86, and then this one here, 69%. So go back to that. There's a breakdown and back test of the trend line. And what I did for you here is showed you this stock peaked right after earnings. They reported earnings. I pulled it up. It was November 17th, 2021. I'm going to go to the daily chart just to show you. Let's go back there a little bit. We can pull it in here so you can kind of see what happened. Let's zoom in nice and tight. This was the top of NVIDIA. I'm going to put the crosshairs on November 17th. So let me zoom in a little tighter. I know sometimes in the video you guys can't see all this stuff. So it's a very similar you know, technical posture. There's the gap. That was where they closed the day before. They reported that night. They were up big the next day. I'll measure it for you. You have to go to the bottom of the red candle, the body. That's where you close. And you closed up that day 11, you know, round up 11%. Continued to build on the gains. Went up about 18.41% higher. Remember, I told you I'm willing to ride out a 20% pop up, and I'm planning to short into it. That's, again, very similar technical posture. I had a little false breakdown too. See the whipsaw pre-earnings? This is why you just got to watch these earnings. It's almost to be expected nowadays. You had a beautiful uptrend line right there, breakdown pre-earnings. Then you popped it. You put in a marginal new high, marginal meaning ever so slightly to the move preceding it. You know, when I say marginal, yeah, NVIDIA, a 20%, you know, move. Well, we're not at the highs yet, but it would, so let's just say it's a 15, 20%. That's a marginal new high on NVIDIA. 15, 20% on Treasury bonds is huge. They don't move as much. You know, the trends in NVIDIA, you know, are much larger. And so that was it. And it never looked back. Put in a bearish engulfing candle, put in a divergent high. And then we went on to, from there, that was zoomed in on the daily, was right here. We went on to hit my second target. And at that point, we had divergence on the PPO indicator, almost divergent. We were oversold. And then there were a lot of things in the market hitting support, and we were reversing, covering shorts there, going long. And so that's the typical reaction. In fact, we hit T1, you had a reaction. These are weekly candles. You had a double-digit bounce, and then danced on it for a while, took it out, hit T2, and that's where we're at. So again, to me, what I see is an uptrend line, negative divergence back then. I see the same thing here. I see a marginal new high, plenty of room if they want to pop it, again, marginal. Let's just keep that 20% or less number, right? We'll just use that for now. It's not a hard number, but that's it. And there's the uptrend line. So now look, you can always apply the second mouse gets the cheese thing here. You can most certainly wait till that breaks. The thing about earnings is a lot of times, and Meta is a great example. I remember back when the market topped in 2021. If you go back to a daily chart, Meta is a gappy little stock. And back here, I'm going to turn off all the lines. After the top was in, remember the Nasdaq peaked in November. Meta already peaked first. And then Meta was, market was starting to roll over. Nobody knew it. Nobody knew we were in a bear market. I laid the case out that we were in early stage, but most didn't believe it at the time. Then Meta reported, and they gapped down 20, that's roughly 26, call it 25, 26% on a gap down. So what that means is, and the reason, if you want to know why I just said, well, second mouse gets the cheese, why not wait on NVIDIA? The potential for a big gap down, I think, is bigger than the potential for a big gap up based on how much hype's already built in the stock and their technical posture. So again, and I may be wrong. That's the only guarantee for years I've ever given you guys. I know some of you jump on it. I will guarantee you, the only guarantee I'll ever give you is I'll be wrong, and I'll be wrong a lot. Key thing about being wrong, keep stops, relatively small to your price targets. Spread out your bets. Again, knocking back to the trolls, that just only want to focus on QQQ short trades this year, despite the fact that we were long at both of the two pivot lows so far this year, and that was the beginning of the year, coming in January 3rd, and then this when T2 was hit. But again, that's if you're trading only QQQ, yeah, it's been a tough year, at least, for my now. So I would give myself, even though I had those pivots and I'm profitable trading NQ this year, I would give myself probably a C minus on trading it, and with the semis in there thrown in there as well. But again, it's the other things where I've gotten A's and B's that have more than made up or enhanced that, actually. Like I said, net profitable on trading the Qs. But I wanted to point out that this is the potential right here that you have. And the gaps work both ways, guys. Don't get me wrong, especially in an uptrend, you can gap up. That looks to me, and I said it at the time, like an exhaustion gap. Meta's still peaked back here with the divergence. There's your breakaway gap, continuation gap, or you can call that the breakaway gap, the continuation gap there, and an exhaustion gap. You can look up those terms. I didn't make those up. And so there's your kind of breakaway gap, I believe, on Meta from the top, and that's the other example. So I showed you the one back from the last bear market or the last leg down in 2021, but here's an instance where Meta gapped down. I forget where they opened, but it was a double-digit 10% plus gap. And so what that does is I would rather have a starter position in NVIDIA because I don't like to chase gaps. I don't like to short a stock that gaps down 10 or 20%, nor do I like buying. It depends on the nature of the stock and how much more upside it has. Sometimes I will buy a stock that gaps up 10, 15%, but I need to be looking at a 50% plus gain on it. So, so I really wanted to just point that out to you guys, that fact that NVIDIA is in an almost identical technical posture to back in 2021 when it topped and was followed by almost a 70, 60 something % drop. Okay, so everybody, in fact, it was actually, it was ramping. It had a similar ramp up just like this. That looks very much like a buying climax. Volume doesn't fully support it. And all I can tell you now, we're in that range. It would almost be, and I will say this, it would be atypical not to see, just looking at the charts, not to see a pop up out of this range with the current momentum and everything. But this market is anything but typical. So who knows? I could flip a coin. We're going to get that. Here's the thing. I won't waffle on. I think it's going down here after earnings. And again, not the day of or the day after, but in the coming weeks, I think they're, like I said last time, I think it was 3 or 4 more days it rallied after the earnings pop, and then put in that marginal new and still divergent high, and then that set in. So that's it, guys. I can sit there. I'm not an expert analyst, so I can't tell you. I'm not going to sit here and talk about their balance sheet, orders, their guidance, and all that stuff. What I'm doing, all I can tell you is the technical posture tells me that this stock is most likely the upside is limited and the downside's a lot larger from here. And hey, that may change. Just like, a month ago today, I was talking about how much I thought it was an objective short entry there, but then not there if it took that out. So, this chart can and will change. And so, if we start just moving up here, moving up, start burning through divergences, and something else is in play, then so be it. All right, so that's my outlook for NVIDIA. I could almost flip a coin to whether it pops up or down. As I said, to see it not pop up after earnings would be almost atypical. But then again, that's the nature of this market. It's not acting normal in a lot of aspects, and so therefore, if you really wanted to know which way I think that coin goes, I'm going to say I'd give it slight odds that we just gap down, because a lot of things are priced in the charts, and if we're ever going to get a catalyst, again, it could come from the economic calendar. If we are going to get that catalyst, it's going to take us down to those 200-day moving averages. Keep that, again, if you want to consider that previous QQQ trade still, an active trade, which I will. I was giving you my trading plan here. Because if you entered here and we're going to go down to these targets, then the catalyst, I can think of no better catalyst than market being disappointed with whatever NVIDIA is selling. And I don't doubt, though, these big companies, guys, they manage their earnings to beat. So it would be a shock if they didn't beat, and the market would really not like that, most likely. But again, it doesn't matter if they beat, don't beat. Only thing that matters is how the market reacts. So that's it, guys. You got NVIDIA reporting. You've got the VIX at support, as I've mentioned in recent videos here. VIX is at long-term support with positive, aka bullish divergences. That in itself too. If NVIDIA somehow happens to poop the bed tonight for the market, then the VIX has the potential to explode. I think there's a lot of unbalanced, a lot of folks unhedge, and the VIX tells you that, put to call ratios, sentiment indicators, and all that stuff. So, all right, guys, I'm going to wrap the video here. Going home short, and, with room to certainly add. And that includes some NQ. I told you before, we don't have any sell signals, but again, if I'm betting NVIDIA down, I'm going to do that. And I've also, like I said, I've got bet spread everywhere. And as we're talking, I just got a price alert on GDX as well. So I'll click on that, and then I'll wrap the video up. Let me take a look at it. Not gold yet. I set alerts on gold and GDX today. 60-minute chart. Okay. I had it at that S1 level. It's just starting to try to crack that. It's not clearly below it yet. But anyway, you guys know what I like right now. Yep. Long VIX, short equities, short gold and silver. If you guys, or ease into those, kind of maybe ease into everything and wait for a little more. But that's one of my, I think we're looking at, downside there. And then in commodities, like I said, natural gas still has more upside in the interim, maybe stall out in a little bit here in the near term. Crude looks good. I'm just kind of lightening up on those commodity bets. I've been pressing those heavy. That's been a big part of, I had a heavy bet on natural gas, and that one was a nice one. So I'm going to kind of lighten up here and hopefully look to re-engage that. Same thing with wheat and all that soon. All right, guys, I'm going to wrap it here. This has been Randy Finney with Right Side of the Chart. Have a great day.